Okay, Obie, thank you so much for joining me for, I think this is our first review of your quarterly earnings, right?
Uh, I
We've had
one
conversations before, but I
great,
don't think
great,
we've,
yeah, great. I don't think we've ever done an official quarterly review, but great to be on. And we've definitely talked about earnings in the past. As you know, they're a big part of what the company does and what we put out. But yeah, excited to kind of maybe dig in a little bit more deeply into those, as well as some of the other kind of positive developments that are going on for the company right now. So it's exciting.
yeah, that's great. I want to give just some warnings and disclosure. First off, I am wrong a lot. Like, I actually thought we were going to get, Obie and I were talking right before this. I actually thought we were going to get rescheduling before the election. I was wrong. And so please do your own due diligence. Do not depend on anything that I say or the fact that I'm wearing a Grown Rogue t-shirt. Um, and please do your own due diligence. And just as a disclosure, myself and my funds are investors in Grown Rogue. It is a microcap stock that is illiquid. My funds, we're the largest owners of Grown Rogue. We own 14%, but we are not employed by the company in any way, shape, or form. Outside of occasionally giving me fantastic weed or some merchandise like a t-shirt, I am not compensated in any way by Grown Rogue. Other than it's been just a wonderful investment so far for my investors. I want to now explain why I find Grown Rogue so fascinating and interesting and why you should pay attention. Um, the first is that they're doing something that is worth studying, and that is they are taking one of the hardest parts of the business, which is cultivation, and instead of going for scale, they're growing for craft cannabis. They're growing in 50,000 square foot buildings, and they are free cash flow positive in the most competitive markets. And it's specifically Oregon has the lowest pricing for cannabis in the country. And yet they're putting up 30% plus EBITDA margins. And while others are leaving the state. And so Oregon has tremendous amount of competition, a strong illicit market. Grown Rogue's the number one brand. Also, really important in the proof case of why Grown Rogue is so important is they spent $5 million to go to Michigan. The price of cannabis collapsed 60 to 70% from when they entered the state. And they, with that $5 million investment, as of the current quarter they just announced, they are producing something close to $6.5 million of EBITDA on an annualized basis just from Michigan. Those are just incredible return on investments. And now they're heading to other states because they believe they have a model. And one of the best investments of all time for an investor like me, and this is why it's such a big holding, is that when you have a model and something that you feel like you can replicate and you have a long reinvestment runway for growth. So if you think about the future of Grown Rogue, we're going to talk about how they're about to enter New Jersey. When I say about to, they're about to start selling in New Jersey. They're going to enter Illinois, and it's going to go state after state after state. And unlike other companies that have been optimized for limited licenses and not optimized for operational excellence, Grown Rogue has been optimized for Oregon style pricing of $800, $900 a pound, as opposed to New Jersey where it sells for 3,500 a pound. So we're going to get into also just how hard cannabis is, and the it being hard is actually why Grown Rogue is able to create so much value, not only for shareholders but for consumers. That is my dialogue. How did I do? Did I do okay, Obie?
I mean, you could be our pitch man. So
Yeah, that's right.
where
Well,
do
I
we
am.
sign
I
you
would.
up? Yep, yep. No, that
Yeah,
was fantastic. I think a great summary. Sometimes I wish we weren't in such a difficult industry especially in the portion that we took on. But again, like it creates such a tremendous like kind of moat that we really identified around what we do so uniquely, which is why we're seeing almost no one be able to replicate it. It's hard, and we just it's where our passion sits. It's where kind of our focus lies, and it's been wonderful to watch the team collectively kind of come together and just continue to deliver fantastic results. It's awesome.
Yeah, and then just the last thing I would say, because I do have a lot of new subscribers since we last talked. One of my favorite parts of Grown Rogue is the focus that all you do is innovation. That's all you do, and your relentless drive for quality and cost. And I will just remind anyone who's watching, or if you're not watching, if you're listening, I am looking at Obie in my opinion, the worst CEO's office I've ever stepped foot in. But it's actually the best because it's an open air room with no doors in the grow house. So what I tell people is the commitment is that you will just not beat Obie and his team on their commitment to quality and cost, and basically their mission to offer consumers great quality indoor weed for a price no one can beat. So I just wanted to mention that as well.
Yep.
So let's get into
famous
it.
Office.
Why? Yeah, famous office. I'm going to make it famous. You can never now move to a nice office. I hope you realize that.
Thank you.
what is the pricing of indoor flower in Oregon, like range wise? Where are you selling for right now?
Yeah, it ranges. I'd call it kind of the average is in the mid eights. So between $800 and $900 is what we're seeing, depending upon strain, customer, timing, that kind of thing, which has come down a little bit. We've seen a little bit of pricing pressure in Q2 versus what we were seeing kind of in 23 and quarter one this year. We saw it starting to creep in a little bit like end of February, and knew it was coming, which is fairly consistent in mature markets. You don't get big swings, but you're going to get movement based upon just the supply demand kind of component. But $800 to $900 in Oregon is kind of the base rate right now.
And what is the pricing in Michigan?
A little bit higher, probably more like 900 to 1,000, which again is down even a little bit in Michigan. Michigan, the pricing pressure hit more, I would say, kind of like June. Right. So Q2 was actually still pretty strong in Michigan. Like we saw a little bit of pressure in Oregon in Q1, which you'll see in the financial results. Still a fantastic quarter all around, but definitely, seeing a little pressure there as well. But, in that $900 to $1,000 range, and that's for A flower. We've got a variety of different products. We sell B flower. We've got a bunch of packaged products in Michigan. But when you're looking at A flower, that's kind of the pricing in both states.
And you do have outdoor flower. What is that generally selling for?
Yeah, we have outdoor in Oregon only. We've seen the same thing. Like we were kind of kicking off Q1 in the 400 to 450 range. It's more now in the 375 range. So it's come down a little bit, which again is just it's been a consistent theme to start 24. We had, really strong pricing back in 2020 during COVID. 21, we saw massive price collapse. That drove a lot of people out of the market. 22, it started coming back, kind of stabilized. 23 kind of reached, more like in the $1,000 range for indoor, and kind of, 450 for outdoor, which is good pricing. But, that's again why Grown Rogue as a company focuses so much on cost control and ensuring that our costs are always going to be at the, in a very competitive way, so that these minor adjustments in pricing, they're impactful to our bottom line, but they're not fatal by any stretch. And so, again, I think this quarter, still 30+% EBITDA in Oregon, which when you think about that from a state and what we're doing here is fantastic. Down a little bit from Q1 where it was more, like closer to the mid 30s. But if we can maintain about 30% in Oregon, and then Michigan, I think was up a little bit, was like in the mid 40s. It's just, those are fantastic returns in these markets.
Yeah, and just as a reminder for anyone who's listening, the highest margins in cannabis are from vertically integrated companies in limited license. What I mean by limited license, there's just limited competition in markets where in Illinois it sells for 2,500 a pound indoor for, in my opinion, much lower quality product. In New Jersey, and we'll get into this, it's selling for 3,500. And again, for vertically integrated, so they're capturing not only the wholesale but the retail, and you're having a Grown Rogue report similar, if not the highest, some of the highest margins from EBITDA in terms of cash flow margins of any company, but they're doing it from states that no one else is participating in, especially not Oregon, that the larger companies left because they couldn't
Yep.
compete. So,
Yeah,
so in terms of, yeah, go ahead.
well, I just so you know, we compete on a margin basis with the quote unquote tier ones. Especially with the recent earnings between just came out for Q2, like the tier twos, and there's been some good data on this. Like from Jesse Redmond and people like that at Water Tower. Tier twos were down a little bit more, like in the 20s. But Grown Rogues, and then that couples with the fact that we exist in markets that most of those organizations won't even touch. And so, that kind of foundation and that fundamental focus you said early on, cultivation and cost control, is going to serve us very well as we enter markets like New Jersey, where pricing is 3x what we're seeing in our current markets. So pretty excited about that and what that's going to do for the organization.
Yeah, is there just the last thing on pricing? Because Glasshouse mentioned it's kind of the same thing as happening in California. Is there anything out of the ordinary that you're seeing with pricing, or is it just you've been through multiple cycles of this, and we're also in the summer months? Is there anything out of the ordinary that would maybe make you a little worried that pricing could keep going down substantially, or is it just normal, do you feel?
No, the price movement is very much smaller in these states. Like, we watched Michigan go from, I think the most expensive pound we sold there in 2020 was $5,000. And so we've seen that massive degradation of value. In these mature markets, it moves around a little bit. Nothing out of the ordinary. It's stabilized. Like, we're not seeing pressure. We have fantastic sell through. Inventory levels are still low. There's no problem with demand. You're just, you got to play the game. It's a buyer's market in a lot of these situations. And so nothing out of the ordinary concerning for the core business at all.
That's great. And so now, and I should have offered you this in the beginning, but congratulations on finally planting in New Jersey. I am so excited for this. I was worried that it would maybe get derailed, or I'm sure you had the same worries. I wanted to talk about, because this is such an important part, just like when you went from Oregon to Michigan, it was such an important part of the Grown Rogue story. And now you're going to try to replicate what you've done in Oregon and Michigan and now do it in New Jersey. I'm wondering if you could just share some anecdotes, or just, me, when I would talk to you while you were getting the everything set up, you share with me just how hard it was. And I'm just wondering if you can share some anecdotes of, from an investor's perspective, we can't see how hard it is to get a building up. Like, how hard is it to renovate a building and get some plants in there? And like, I'm wondering if you could just share with us the details. It's just a couple of details.
I mean, it comes down to execution, right? And so there's no like one thing to point out in terms of the difficulty, but we have really, really high expectations for our performance, and so we hold ourselves to an extremely high standard. We missed kind of my internal expectations for timeline, but when you step back, you go, we signed our deal with Abco in October of 23, and we are fully constructed in phase one, plants in the building in less than a year. Like, that's pretty unheard of for most people and how they would go about constructing a cultivation facility. And then we do that at costs that are extremely competitive. Like, we'll probably land this full project at somewhere in the $200 a foot range. typical industry metrics are 275 to 350. And so that creates some of the stress, right? How do you do a project at the speed we do it while also maintaining cost control? Because, normally you get quality, price, or speed, right? And we tend to we try to get all three of those, and that's really difficult to do. And so, it's just a huge testament to our team's focus and, the things that they've done and the pieces they put together. It's a huge compliment to our partner in New Jersey, Abco Garden State. Our contractor there has done a fantastic job. And so, it's just, the sort of it is, it just comes down to work and effort, right? It's really easy to sit around, a year ago in a boardroom or at a table, just like people used to do with their projections, and make yourself a millionaire on paper. Just like it's really easy to say, oh yeah, we're just going to turn it on. It's just putting up some walls and some lights. It can't be that hard. But it's just the amount of detail that goes into it and the different areas of expertise. And then, the stress of realizing, we have taken other people's money. We have an obligation to return an investment on that. And we take that really seriously. I mean, one of the things I learned as a very young man was it's really easy to spend someone else's money. And I think that's been one thing that's been really good for Grown Rogue is, we look at all this cash like it's our own. And so we're just very cognizant of how we spend it, where it goes. But it's good to have this first phase behind us. I was laughing, now the real work starts, because great, we built it, but now we have to operate it, to the efficiency levels that we expect. But I'll tell you what, over like the weekend as plants were coming in, and just, could feel the reinvigoration of our team, myself included, just the excitement, seeing the pictures. I'll be out there next week, which is really exciting to get a chance to see everything in there. But it's just a big milestone for the company. And, the question for Grown Rogue recently has been great competitive markets, great financial metrics, good profitability, great operational excellence. Can you scale it? And here we are answering that question. And completing construction in Jersey is one of the big first steps. Next, we have to put crop through the system and get it harvested and sold. And then, Illinois is right behind it. But I think we're putting to bed and answering all the questions that may have been out there around, is Grown Rogue capable of building a business of scale that matters? And, we're pretty excited to kind of, not all the way there yet. There's still gonna be some questions, but like we're delivering. And that's what Grown Rogue does. Like we say what we're going to do. We do what we say. Pretty excited about it.
And I can just say that I'm very grateful. So it's very gratifying and satisfying to me, because when I invested, you and I, we got on the phone and we're like, in December of 22, and I was like, hey, how can I invest it? We agreed on this convertible debt. The whole idea was that you were going to use that money plus the money that you raised again in August of 23 was to expand into new markets like New Jersey and Illinois. And it's really, really cool. As an investor, you don't often get to see, you put in this and you get that. But so it's really cool. And congratulations. I'm really proud to have been just a small part of this. I wanted to dive into the mistakes that you see others make in cannabis with building or retrofitting an indoor grow. And you've mentioned this to me before, but I think it'd be really helpful just for others, because what I hear from you is that others may hire consultants, and then you start having cost creep, and then maybe you overbuild. And I just wonder, what do you see or hear that others are doing that maybe Grown Rogue, because it becomes really important. It may not feel like a lot if you're in the 200 range and people are spending but it's like a 50% lower cost, right? That Grown Rogue is building a building. Then if I add on that other people are doing expensive sale leasebacks that escalate, and then they're probably building too large of buildings, right? So then it just spirals out of control, your costs.
So, the savings we put in is, measurable. Like 50% on a dollar is 50 cents. Doesn't mean a lot, but 50% on $15 million is like, it's a measurable amount. And so, landing a project like this in the $9 to $10 million range versus a $15 million range, like that's real cash, especially if you're a company of our size. I think it's a myriad of things. It's hard to pinpoint exactly just because I'm not in the inner workings of where mistakes may have been made. I think they're getting better, right? People are learning a lot more about kind of what it takes to grow cannabis at scale and how to best spend your dollars in terms of some of the new bells and whistles. I think areas where we really excel. We really focus on the design and engineering in the early stages and do a lot of the work ourselves to make sure there's not a bunch of changes. Because once you kind of fix things, a lot of your cost overruns, and you're like, we didn't do that right. Now we got to change a wall. The wall's already been built. So really trying to make sure the plan is tight before you start, or at least understanding, and then adapting to it if it's not exactly perfect. Because these things never get built to perfection. They're just different building shapes, sizes, different regulatory rules, things like that. The other thing we've seen, and we're experiencing this a little bit in Illinois, where we've using just you got to make sure your engineers are not over engineering. And the analogy I'll give is there's the 1% effect, which is you'll have a certain time of year where you get a certain temperature condition where your equipment, like mechanical equipment, is going to have to achieve the result you want, and they'll size for that. And and so we're a little bit more we live on the edge a little bit more, and we say we don't need you to solve for the 1%, right? During that 1% time when there's like a heat spike, our rooms might run a little bit warm. That's okay. And instead of spending an extra 10, 15, 20, $50 a foot on that 1%, we're happy with understanding that there's potentially some weakness there. And so that's another area we see. And then it's a bunch of little things, right? Control systems, do we put the Cadillac in? It goes back to what I've been saying for a long time. And we're starting to make some decisions that will provide more of a Ferrari-based engine for our operations team. But we've always been of the opinion, put a race car driver in a Buick. Not that Buicks are bad cars, but get my point. Versus put you, Aaron, in a Ferrari. You put you in a Ferrari on a racetrack with a race car driver in a Buick. The race car driver is probably going to win.
I'm very happy in my minivan. I'm very happy in my minivan.
There you go with the minivan, and that's another thing. That being said, as we start to understand the opportunity with some of these control systems, like in Jersey, one of the big changes we made is we upgraded physically our control system. We installed something that's a little bit more conducive to a facility of that size. It's global. It's not room by room. That added, $10 a foot to our cost. I'm just throwing a number. I don't know what it is versus doing it for $2 a foot. But we said, with our team, giving them a little extra tools, let's see what they can do. Same thing we're doing in Illinois is we're going through the design engineering there. We're looking at upgrading our mechanical system. We're going to pay a little bit more, but it's going to give us a little bit tighter band. And so it's just like in our operational excellence. It's not like, we're just way cheaper in this one area. It's a combination of things. It's the passion of our team. And quite frankly, it's the special sauce that Grown Rogue has that is becoming more and more protectable. We're seeing it harder and harder to deliver. And if everyone could do it, they would be. And so we're starting to think it's, at our scale with our approach, it's pretty unique. And, the results are kind of getting, more obvious at this point.
Yeah, no, for sure. I am an investor, as you know, in Garden Society. It's a private company that does manufacturing of edibles and pre-rolls and some vapes in California. They just expanded and opened in New Jersey. And she, in very colorful language, was describing to me how terrible the quality is in New Jersey for flower. She was having trouble sourcing good quality flower in New Jersey for her products. She's told me some crazy things about since she's launched about California brands that just immediately they launch and 3 days later they're sold out. And I'm just really curious now that you're planting, what do you you're right now, you described to us that you're selling 8 to 900 in Oregon and 900 to 1,000 in Michigan. And I've been hearing pretty consistently, and you could just work backwards from the retail prices, but it's like 3,000, 3,500 a pound in New Jersey. And frankly, for not good quality flower, definitely not what you can find in Michigan or Oregon. And I've even heard some crazy like craft brands selling for, much higher. So I'm just curious what you hear and what you're seeing. Obviously, you won't know until you start selling in the future. But what are you hearing about pricing?
Yeah, I mean, similar to what you just kind of portrayed. I mean, it's 3,000 plus for flower. It's $25 to $30 an eighth. And again, backing into it, usually it's a keystone. We've heard actually even sometimes that the retailer is taking less than a double, and so they're only marking up 1.5 times, and so that would mean the prices are even a little bit higher. The quality is better now than it was a year ago when we first looked at this project. The big things we're noticing there is it's really inconsistent. But you're seeing, I mean, there's some growers that are coming in there that are good. I think Clay Nine's there. There's a few others that have, they've got good experience. They're going to put some good product on the shelf. The most recent feedback I've gotten and through our sales team that's been, building some early relationships, keeping their eye on the market is while the flower quality is definitely improved, there's still nothing like you see in like a West Coast brand like Grown Rogue. Like there's no exotics, there's no color. And by color, I mean like almost everything we sell in Oregon has to be purple. That's the expectation. It's a requirement. And so, knock on wood that we don't see a big change. Again, we've talked about this. We don't expect Jersey to have a massive, rapid price degradation for a number of reasons. Number one is there's no capital available in the markets right now, and so people aren't building stuff. We've heard of some stuff that's like it's still in like the engineering phase, which means it's a year out from turning on. But there's just nothing being built. Two, there's not the way the regulatory works there, you can only have, I think, 3 dispensaries. And so you don't have this big rush of the MSOs coming in who need a vertical kind of model. And there's some big ones already there, but it's not like this. It's not in Illinois or Florida in terms of they just want to come in there and dominate. And then, they're big companies that are there already have a ton of debt. And so, that script is played out in a lot of states. And so you don't see this massive dumping of product into the market that could occur like you saw in Massachusetts, where everyone tried to play the wholesale game and it completely eroded their margins. And so we think we have a year or two, maybe a little bit more of really, really strong pricing. Look at Illinois. It's been around for quite some time. It's still in the $2,500 range. We're excited about that market, but we think Jersey is going to hold price for quite some time. That being said, we love the surplus profits. We love the ability to capture more margin, but Grown Rogue's built to compete in extremely competitive environments. And so if it happens faster, we'll be disappointed, sure. But for us, that's what we're built to do. And so, we'll be ready for whatever New Jersey throws at us.
And so when do you think first sales will happen in New Jersey?
First harvest should be in November, like kind of early November, based upon the crop schedule, which would put sales kind of Thanksgiving, early December, coming into that market.
And then your target is 12,000 pounds of annual production. How do you think about ramping up towards that? What should investors think about because it's not like this is one of the things I love about Grown Rogue. You're gonna be conservative and make sure you're doing it right, not just blast it out. So how is it going to work?
Yeah, so the current plan is phase 2, which will be the full completion, which take us from, right now we're 500 to 600 pounds a month based upon the current flowering capacity that we put online in phase 1. Phase 2 doubles that, which will take us to 1,000 to 1,200 pounds a month, which is 12 to 14,000 pounds a year, and that's of whole flower, right? We'll have some of that will get
I like
pushed into
that
our
extra
pre-rolls.
2,000. I'm going to hold that.
Yeah,
I'm going to hold that to
yeah.
you.
Well, and if we can, we've
Just
been
kidding.
playing with some new lighting technology, not technology, but we're moving to an LED system, and we've seen fantastic results on yields and quality in that. And so a 14 is not out of the range of possibility for sure. But we like to be a little conservative in our estimates and kind of under promise, over deliver. But the full construction, to answer your question, is currently scheduled to kind of be completed in Q1 of 25, which means we should be at full capacity coming out of Q2. And that should be at that, 1,000 to 1,200 pounds a month type range. And depending upon timing with, how things are looking in the market, where like our cash balance is, like balance sheet's super strong, but, we don't want to get overextended. Would we accelerate some of that to turn on a little faster? Maybe. Going slower probably doesn't make a lot of sense. So it's going to be coming soon.
That's great. And then when I think about, because you just do cultivation, it's not that complicated to analyze your business. And one of the things that I absolutely love, and thanks to you and Jake at your company for just providing so much detailed information in your quarterly press release. How should we think? And I know that you're just turning it on now, but how do you think about the cost to produce in New Jersey versus Oregon or Michigan? Is there some timing element? Are there some structural things that'll make it a little more expensive? How should investors think about it?
Yeah, we're estimating that cost there will be higher. I think our estimates on our models right now is, like we're break even in the $600 to $700 range in Oregon and Michigan, and I think we're estimating around 1,000 in Jersey to start, just to account for ramp up, less experienced team, unknowns. I think as we get to full like operational efficiencies, we'll see something very close to what we see in Michigan and Oregon. I mean, labor out there is not tremendously more expensive. Now power is going to be more expensive. We don't know exactly what we just haven't done the math to go kilowatt cost times, expected use or, kind of utility. But I think that's going to be a little bit higher in that portion of the country. Well, there's a tax we got to pay back to the local community as part of our licensing. And so it'll be more expensive than Oregon and Michigan, but I don't think materially, and more than offset by the 3 to 4x pricing delta that we expect to see. I mean, right now, if you're selling in Oregon at 800, 850, it's a 4x price difference in terms of what we're seeing in the market there. I mean, it's the surplus profits coming out of Jersey in the early stages are going to likely be considerable for Grown Rogue.
And you can you're taking a 70% with your local partner. It's 70% economically of Grown Rogue versus 30% to the local partner. You can just run the math on. Anyone can just run the math on what they assume the sales are going to be and the number of production. You can start. I mean, part of the bull case on Grown Rogue is, there's about 260 million shares. It's when all the convertible debt is converted, it's fully with all options and warrants, an unlevered company, where the stock price is versus you start coming up with some pretty large numbers that in relation to your market cap. But it's good to know that over time. And my more important question was more that, was there anything structural long term? And no, it shouldn't be that crazy or material of a difference between your existing markets once you're fully ramped.
I don't think so, but we don't have enough visibility into that to know for sure. There's nothing that suggested, this is like 50% more expensive to operate in.
Yeah.
And so
that's the one thing that I would do.
Yep.
Now you partner, one of the things I love is your relentless focus on cultivation, but you partnered company, another group, to basically launch a retail store. But what I love is that you're not running it. You invested in it. You get 30% of the economics, but you are not running it. It's a totally different business. But that should potentially offer you quite a bit of, and from what I understand, it's in West New York, New Jersey. It's kind of confusing, but anyone who knows the area understands. and it is next to, I believe, the busiest McDonald's in the country. Do I have that right?
It's like
Some
a
crazy stat like that, or
yeah, it's like a top 10. So West New York, New Jersey is right across the Hudson Tunnel or whatever it is coming out of New York City. So highly densely populated. Again, the McDonald's across the street, I think, is a top 10 in the world for revenues, and it has no drive-through. So it just gives you an idea of the amount of traffic and people that exist inside of that framework. It's the only dispensary within like 5 or 6 miles.
and why that's
We
important
make
is no one really has cars, so it's like
yeah,
it's people are going to be walking.
yep, a lot of like public transports and like ride shares, things like that. And so it's in a fantastic location. Like that's number one. Our partner there, Leland and his team are fantastic partners. They've been trying to find a group to help finance their project for a little bit of time. So we made a passive investment. For a couple of reasons. One, we looked at it as a really good investment, the way Grown Rogue was looking at it. Two, while we're very focused, we think about, dabbling our toes into different verticals. And is this a way to kind of just evaluate retail, kind of from afar where there's not a whole lot of, not like we risked our balance sheet or anything. Like it was a relatively small investment for us. Back when we first started doing the Abco Garden State project, the cultivation, there was very few retail in New Jersey. And so we were a little bit concerned about captive shelf space. And so this was kind of a hedge against that a little bit. Since that's gone away, like retail's been opening up pretty prolifically across New Jersey. I think there's over 100 retailers now in the state. And so our ability to place product on shelves is probably not in question anymore. And then the last piece was, having a captive retail partner allows us insights to the customer that we don't have since we don't have our own retail. And so really excited about kind of that partnership, some of the learnings we'll get, we can trial stuff there with different products or different kind of designs on packaging, just to see, hey, does this work before we roll it across the state? But yeah, pretty excited about that as an opportunity. It's going to open up in current construction, should be done in November, opening some kind of December, early December, which could work out really, really well for when our first sales are available to put right on that shelf. Is kind of like a big grand opening. So the timing of that can be very fortuitous. But yeah, it's and we continue to look at that. We've looked at other retail in New Jersey. We've seen some stuff in Illinois. We're not opposed going after retail. But again, Grown Rogue's core focus is on cultivation and flower. And we're just, we understand who we are and what we want to be. And we're going to swing at fat pitches. And if a fat pitch comes in, that's a retail opportunity for us in a market where, we see a lot of potential, we'll definitely entertain it.
Gotcha. That's great. Just diving into a couple of last things on the Q2 earnings. Few things jumped out at me. The first is you have this derivative liability that looks really scary and actually flows through your income statement. But it's really, just so everyone knows, you did a convertible debt with me and a few other investors. And because your stock has performed so well, because you're doing so well operationally, that the value of that convertible debt went up a lot. And so it shows us a liability. I'm just confirming with you that once that convertible debt and the derivative liability, when it converts, which it will in the future, all of that will go away. If you look on the cash flow statement, as it's reversed out on the cash flow from operations. But I just wanted to confirm.
Yep. Yeah. It's an accounting rule that essentially says we issued a convertible debt at a certain price. Price has gone up. What's the delta? And it's a calculation. I'm not an accountant, but it's a non-cash liability that disappears once the conversion happens. And it would have been higher if folks like yourself hadn't done early conversions, things like that. So thank you for that again. Can't stress enough just how supportive you've been to the organization and that being proactive and converting early. But yeah, it's there's noise sometimes in these financial statements, especially as these companies are early. We're in an early industry. We're growing. Grown Rogue's balance sheet, the performance in our core markets, and then the growth potential in front of us. I couldn't be more excited about where we sit. really, really, I mean, it's just everything's on like, running at full cylinder. And so things like that just become kind of noisy, and it makes like the net income look awful. Um, but it's a non-cash item that goes away as soon as they can, which they will get converted. I mean, those things are well
Yeah. 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 There were also some one-time costs for Michigan. And this is the other thing I really appreciate is you are sharing, some adjusted numbers, but you are sharing your operating cash flow. And what's crazy is that you're like, there were some one-time costs in Michigan that you mentioned in the press release that I think is this quarter and next quarter, and then kind of go away. And then you're clearly ramping up because your
Yep.
SG&A is going up for New Jersey and Illinois. Um, is there anything more you just want to tell about, one of the things, and the reason I bring this up just to talk to you is so many times there have been cannabis companies, and I've been burned by this in the past, which is, hey, this company has this huge growth opportunity, and then it grows and none of it flows to the bottom line. And you're just
Yeah.
like, hey, what happened to all the growth? And there's this crazy expenses go out of control. And then everyone's wondering, where was, where's the beef,
Yep. Yeah, I think it's really important to remember that, we are not generating any revenue or cash from Jersey yet, but we've been spending a tremendous amount, not only in the form of loans to build the facility, which is tracked on the balance sheet, but we're a different company today than we were a year ago, 2 years ago, and so we've staffed up not only be prepared for, the new markets that we're turning on, but just like our accounting team's been beefed up a little bit. Like we need to start reporting on a more timely basis. Like like we're behind a little bit on our peers. And so there's just some things we need to do as a company as we've gotten a little bit bigger that obviously is going to be offset when you start generating the cash out of Jersey. And then, we have some historical, which is kind of an impact this quarter, associated with the purchase and buyout of our Michigan partner. Just the way the accounting rules work, it's more of a one-time cost, but it gets tracked into kind of the professional like consulting fees, rather than more on the financing side of it. And again, there'll be noise, quarter to quarter, year to year. The one thing Grown Rogue prides ourselves on is that we're still transparent. Like, you'll see that as a bullet right up front. It's not like we're like, oh, this isn't a great bullet this quarter, because cash flow from operations is down based upon the things that all make sense to us. We don't not put that bullet up. Like we're an honest company that says, here's who we are. And we're very bullish and optimistic. Like nothing's changed in our opinion. I'm still, well, now the second largest shareholder, but I'm coming for you, Aaron. But like, still haven't sold a single share. We exercise options in July. And so like there's been, we're super excited about where we're going, and there's going to be noise, but we're going to give you guys, our investors and the shareholders in the community, the facts. And then you get to make your own decision. And if we're not the right company for you, like there's plenty out there. I still think for anyone that looks at cannabis as an investment, and if you're not just wanting to try and play a short-term trade, to not have Grown Rogue in your portfolio is a massive mistake. I think we have one of the biggest and brightest futures of any company in the space, not only because we fundamentally execute in markets where we think the future of cannabis will sit. Like we make 30+% margin, and we don't have like, bullshit EBITDA. Like our ad backs are super small. We're not throwing in a bunch of costs that are trying to make it look better. Like it's the conversion to operating cash flow is really good. But there's people got to make their own decisions. But I wouldn't have my life's work tied up in this business, with all the things I could do if I didn't think the future in front of us is just fantastically good.
Well, speaking of the future, my last question in regards to the future is a week and a half ago, Glass House kind of surprised me and announced they were exploring possibly growing. And one of the things that I was curious about, and I had a conversation with Graham and Kyle and Mark Vendetti, and I posted it, was just that how hard it is. Is it just as hard to grow hemp as it? They said yes. And they're exploring it over the next year and a half. And because if you can sell THCA hemp flower, it's federally legal. You can sell it across interstate lines. And there could be like I could get grown rogue flower sent to my house direct to consumer. And so I'm curious is if you've looked at hemp, or are you exploring it, and what your thoughts are on hemp or hemp flower.
I mean, how much time do you got? Just kidding. I'll keep it short. But I mean, the reality is the Farm Bill created this. I mean, it's not. I wouldn't call it a loophole, but there's some misunderstanding between what should be regulated cannabis and unregulated hemp, and really the differential is THC versus CBD. I think the conclusion is THC is more of an intoxicant. CBD is more of a health benefit. So the intent is not necessarily how the rule was created. So I do think there's quite a bit of risk for anyone that would jump directly into the hemp business, trying to, kind of put THC into the marketplace. And that rule is adjusted so that no longer occurs. Assuming that doesn't happen, and there's no guarantee it will. Like, if you personally ask me, should it? I could probably go both ways. I think there's reasons why it should. There should be regulation. I could also say, hey, we need a free market, and this whole, restriction on, interstate commerce, like we want freedom of choice. We've said that for a long time. Like, consumers in Florida, if they want weed from Oregon, from grown rogue, they should be able to buy it. It should be regulated, it should be tracked, doesn't go to people under 21. It's not diverted, but give people access, so they have freedom. That being said, we're looking at it. If there's an opportunity to, exist within the right regulatory framework and ship, these types of products across the US, I mean, we'd be crazy not to. And we have a tremendous opportunity to scale something up like that super quickly, right? We exist in the Rogue Valley. It's in the Emerald Triangle. It's one of the best growing regions in the US for outdoor cannabis. And, we could scale up. I'm not saying we get to 100,000 pounds a year. We're never going to, but like, we could produce massive quantities of high quality flower to ship across the US under those rules very, very quickly. And so we're doing our research. Like, it's not something we'd be able to complete this year. But I expect in the next couple months, we'll probably, either have internally what we think would be a good strategy. Granted, that's all going to depend upon what happens with the Farm Bill and any changes to that, because I'd hate to spend a bunch of money and scale up to realize they, close that kind of opportunity. But it'd be difficult to pass up. Maybe not so much in just like the raw flower category, because we really see outdoor as an opportunity to build branded products. But imagine, and we have, it's, another reason why you might see a little bit of margin compression in Oregon, a little bit more even than Michigan, is we launched pre-rolls. Like, we've been the number one flower producer in Oregon for, years, but our pre-roll business, which, creates more delta in actual dollars, but, you have packaging costs, so your margin's going to shrink just a little bit. But it's adding more dollars to the bottom line. But I digress. But to ship sun-grown pre-rolls across the US and Grown Rogues branded products, super exciting. And so we'll do our work. We'll see. It was really, I thought, cool for Glass House to kind of be on the forefront of that, especially at their scale and size, and be talking about it publicly. They continue to kind of be pioneers and leaders in this space in terms of what they're doing and accomplishing. And so, we'll watch it and see. But, if the opportunity arises and it works, we definitely like to put Grown Rogue product in some of those markets for sure.
Well, here's the wonderful thing I know as a shareholder is I know that you will try to make the best decision as if my dollars are your dollars, and I've watched it and I've seen how you and your team have executed. So if there's an opportunity, I know you will go and attack it. Obie, this has been fantastic. Thank you so much. I'm so excited for New Jersey and what's coming. And then soon after Illinois, the next 12 months are going to be a lot of fun.
Yeah, agreed. Yep. Yeah, super excited. Thanks for having me on. And yeah, look forward to doing it again soon. Maybe after we get, first sales in Jersey or something like that.
Yeah, that sounds great. Thanks so much.
Okay. All right. Thanks.